It's 6 digits.
What's up, guys? Welcome to another episode of Six Figures to Bigger Figures. This is my story of how I inherited, lost, regained, and surpassed a six-figure net worth. All I ask is that you like, share, and subscribe to @6FTBF. All right, I want to talk about accounting. Right? Not just tax accounting, but the accounting. A couple months ago, a lot of you guys follow Joe Budden and some of his members of his podcast had some issues as it pertains to money, and they kept mentioning and bringing up the accounting. They wanted to see the accounting, and the accounting didn't look right. It was just in Excel, and the information didn't add up. And kudos to them, right? Kudos to them. So what I want to talk to you guys about is how important the accounting of a business venture is. Many of us are entrepreneurs. We're going through a gig economy. Everyone is investing in themselves, and it's a great thing. It's a wonderful thing. People are partnering together. Everyone is trying to decide what their hustle is, and I totally respect it. What I would encourage you to do is, in any venture that you're doing, be sure to understand the money coming in. Where is it coming from? How often do we get it? Or are you getting it? How dependable is it? Right? And obviously, how much? At the same token, you have to understand where that money is going, right? Now, accounting can be, I guess, a complicated thing, but it's very simple. All it is, essentially the statements that you're looking for, what they call a profit and loss. This is just a statement to show you revenues that come in and expenses that go out. If the expenses are less than your revenues, you have a profit. If it's more than your revenues, you have a loss. And each line item, anyone that's proposing the business to you or showing you the business activity or is making promises about how a business is doing, ask to see the financials. And that for any business that's standard for any business. If the business is unable to produce those statements, that's a red flag. Okay? And it should be clear. It should make sense. Right? If you're in the process of selling oils, selling essential oils or what have you, okay, you should see from that the cost to produce said item. Then you should see from there how much money that person gets from selling that item, right? That's the very basic, the first part of your financials. That gives you your margin, right? You have revenue and the cost to produce that item or that service. That's your gross revenue minus your expenses to produce that item. That's your gross margin. That's what they call margin, right? So sometimes you may be in certain meetings, or I'll be in a meeting. I may even use it. You may ask, or you may hear someone ask, what's the margin, right? What they're asking is, hey, essentially, how good are you at making money on producing that item that you're selling? Once you get past that first level, then you have your operating expenses, right? You have, if there's gas, if there's salaries, if there's admin costs, there's computer costs, there's utilities, the whole nine, right? Those are typically your SG&A costs or your operating costs. Once you take away your operating expenses, then you have what they call operating income, right? So Margin minus operating expenses gives you operating income. Then from there, you can calculate your operating margin. See? Now at that point, that tells the user if that business is not only able to pay for the product, but it can pay for the cost of running the business of that product. That includes that product, right? What they call the back office. So are you making money in selling this product? Good. Are you making money in running the business? Operating income. And then probably the most important or the most common acronym you'll see is called EBITDA, earnings before interest, depreciation, tax, and amortization. And that essentially would tell the user, what is your earnings, your cash earnings, prior to any non-cash expenses, essentially. And EBITDA is very important. Now, once you understand those couple elements, then you can understand valuation. I'm getting a little advanced here, but stick with me. And valuation could be a multiple of EBITDA, or it can be a multiple of revenue. Margin can let you know, again, how effective that business is at creating said product, right, and selling said product. Operating income is going to let you know, or EBITDA, how well is that business running as a whole? Are they running that business well? And this information should match the narrative of what they're telling you or what this person is selling you. If it doesn't match, it should raise a red flag. I'm being very basic because it should be very basic, right? You don't necessarily need to be a CPA, master accounting extraordinaire like moi to understand some financials. They're relatively easy. It should be relatively easy. Now, that's not to undermine the work and effort that goes into making it accurate. It actually takes a lot of work, and it's very hard to make financial statements simple because you're taking a lot of data, processing it down, making sure it makes sense, keeping it tight, keeping your controls tight, all the other boring stuff that you don't care about, right? That people pay me money to do. But my job as an accountant is to make it easy, is to make it understandable. The governing bodies and the accounting bodies, they went through a lot of effort to make this information understandable and digestible for the public so they can make informed decisions. So if you get into a business venture with a friend, cousin, family, whomever, partner, former classmate, whatever it is, and they're unable to produce those financials, or the financials is giving you a story that's inconsistent with their narrative, red flag. And if you need someone to look at some financials for you because you want to get more comfortable with it, hire an accountant.
Stacking money like 365.